Hello, I'm Adam Grimes with Market Life. So let's get started here. This is being recorded over the weekend, so this is before the open of June 10th, 2019. We'll talk a little bit about the market last week and what I think is happening or maybe in the cards for this coming week. Before we do that, I want to talk about a few specific trades. So we bought calls in DBA. Couple things here. So first of all, if you drill down into the options, there's not a lot of options trading activity in this ticker. So it makes it a little bit difficult to do a spread. I almost always prefer to do a vertical or a ratio or something like that. Buying single calls is difficult. The good thing, of course, is that you have open-ended upside. And I think, honestly, we want that for this trade. If this trade works, there's pretty good upside potential. So we might want to uncap that, but it's a little bit more expensive to buy calls. You don't have the trade doesn't have quite as favorable of an outcome. We'll talk more about that later. But we bought calls, and it's also important to understand what's driving this trade. So my thesis is that grains, and I'm showing you grain futures. Look at the weekly here up in the upper left-hand corner. So here's soybeans, here's wheat, and these have been very, very weak for a long time. And then over the past few weeks, we've seen pretty dramatic explosions off of the lows. And here's corn. In fact, the Keltner channel, this is the first time we've been back to the upper Keltner channel on corn on the weekly in a long time. Like really a long time, 2016. Let's look at wheat. Wheat has touched the upper Keltner channel a little bit more on the weekly. We're well through it on the daily though. So the point is there's a good chance the trend has turned. If I want to play this with an ETF, there aren't a lot of ways to do that. DBA is a broad agriculture fund. It's reasonably liquid. Like I said, the options aren't great, but they're tradable. The problem here is that this has corn and soybeans and wheat. It also has a lot of other stuff, which for purposes of this trade, I would kind of consider to be junk. It has a little bit of cotton. It has a lot of sugar. It has a lot of cocoa. It has meats. It has live cattle and feeder cattle. I don't really want those things, but I think overall the type of move we're playing for here with grains, if it develops, is going to sweep everything along. And it's enough to, and also, you know, it's on a standalone basis. This chart does show some evidence of bottoming. So I'm showing you a trade here. This is a trade that I think you could probably put on any time over the next several days, maybe even next several weeks. We did it Friday. I think we're early. And of course, what's the problem with being early? Maybe you're so early in a trade that never happens. And that's really not what we're looking for, but it certainly is possible. So we're early. There's no price confirmation. If you want to wait for price confirmation, a good way to do is look at this bull flag here on the daily and just wait for a break to the upside. Okay, some other trades that we were managing. So we talked about Mickey D's, McDonald's, MCD. We took some profits on this. And why? Well, in general, like really broadly speaking, let's just imagine that you were a genius and you got long McDonald's right here on the bottom, okay? So there are two ways that you can get out of the trade. You can get out of the trade on a trailing stop, which means, you know, I don't know how tightly, maybe you trail your stop like this, maybe you trail your stop back here, maybe you trail your stop back here. Who knows? You know, use some kind of moving average or something. But if you're using a trailing stop, one of the truths of trading is that you're always going to be stopped out on a move like this, meaning all trading is a trade-off, meaning that you're always going to give up some efficiency, right? You could have sold here whenever you exit and you ended up selling down here. The other way to exit is on some kind of price target. So, and there are a lot of different ways to do that. One possibility is to sell at the upper Keltner channel, and that's actually what we did here. But, you know, you sell here, and you could sell partial. You don't have to sell everything. What this does for you is you're guaranteed to be selling when it's moving in your direction. But what could also happen? Well, of course, right? You could sell there and it continues going. So there's no perfect way to do this everything you do is a trade-off. But for me, I like to take a little bit of profit and by a little bit, I mean maybe a third of the position off when you get a good move, particularly an extension above the upper channel. And the other thing, so that's why we did that. The other thing playing into this is the broad market has been really strong. I blogged about this week. I thought this move was pretty predictable for at least the second half of the week. And I think it's a real good chance that we continue higher here too. We'll probably see some follow through from the Mexico tariffs not happening. The market had a pretty negative response when that discussion started. Now that after the market closed, President Trump announced that we weren't going to be implementing those tariffs. So I think we can expect that to be a pretty big positive for the market. However, the market's already a little bit overextended. You don't see it, certainly don't see it on the weekly. Well, maybe you can. It's a big bar on the weekly. You don't see, you're not near the upper Keltner. Depending what period of RSI, you might or might not see overextension. But let me just tell you, the market is overextended. We're up 4 days in a row, 4 white candles. And it's not that the market can't go up more than that. It's not that you can never have 4 white candles in a row. You certainly can. You have 20, right? You can, but it becomes increasingly unlikely. So we're probably due for a little bit of a pullback. But if we have a little bit of a pullback and we stabilize, let's say anywhere in this area, there's a very good chance, very, very, very good chance we continue higher and touch all-time highs on the index. So that's kind of what we're thinking over the weekend. That's how we're thinking for this week. We're extremely bullish. Last week, we took some longs off and reduced some exposure over the weekend, and we'll kind of look to reset and try to time some long entries a little bit more carefully. We still have enough long exposure that if we gap up on Monday, that will be pretty good. But we'll be looking to add some exposure on any kind of pullback. That is the thinking, and I'll see you back after the close Monday for another update. Thank you very much. By the way, go check out my work, marketlifetrading.com. We're also running a special Spring 19. Use the code Spring19. You get a 20% lifetime discount, and that's on both a premium and a plus subscription. And that'll let you see trades like this before they happen and know what we're thinking in a lot more detail about markets. Marketlifetrading.com, Spring19 for the discount. I'll see you back soon for another update. Thank you very much.